Hi, this is Elliot Eisenberg of Graphs and Laughs here to catch you up to date on the latest in residential sales data. In Hillsborough County, single fam act prices went up 2.9%. They went up 4.4% on the multifam side. They went up in all three counties for both types of properties. In terms of sales activity, they went up 10.1%, the best single fam performance of all three counties. And they went up 4.6% on the multifam side. If we look at sales price as a function of list price, it went up a full percentage point from 96.6 to 97.6. Very nice. On the multifam side from a year ago, they remained at 97.7. If you look at pending sales activity, they declined 8.4% on single, but went up 10.3 on the multifam side. Lastly, inventories fell 15.2% on the single fam side and went up 14.9% on the multifam side. All in all, multifam looks to be a little stronger than single fam. Looking at Pasco County, single fam prices went up 4%, where multifam prices went up 9.1%. If we now look at sales activity went up almost 9%, 8.9% on the single fam side and 30.1% on the multifam side. Now turning our attention to sales price as a function of list price, it's the highest of all three counties and both types of properties for single fam in Pasco at 98.5, up a year ago from 97.6. On the multifam side, sales price as a function of list price declined to 97.4 from a year ago's level of 98.7. Looking at pending sales activity declined 2.7%. On the multifam side, however, they went up a very strong 36.5. Lastly, on inventories declined 10.5% on single fam, but went up 26.9% on multifamily. Like in the other counties, multifam seems to be outperforming single family activity. In Pinellas County, single fam home prices went up 9.7 and multifam prices went up 15.6. That was 15.6 was the best of all three counties for both types of properties. In terms of sales activity, it went up 5.9% on single fam, but went up 34.7 on multi. That was also the best performance for all three counties, both types of properties. Sales prices were 97.3% of list price, up from a year ago. By contrast, on the multifam side, they were 96.7, down a little bit from a year ago. Pending sales were up 3.2% on the single fam side. That was the best for all single fam. And on the multifam side, went up 23.2%. Lastly, inventory growth declined 1% on the single fam side. That was the best for all single fam inventory numbers. And on the multifam side, went up 52.2%, the largest increase across all three counties for both types of properties. All in all, here, multifam again outperformed single, and I think Pinellas probably performed best of all three counties. Turning our attention to the national economy, 23 Q3 GDP growth came in at a sizzlingly strong 4.9%. It was led by household consumption and inventory growth. Okay, inventory growth can't stay strong forever. You run out of space to store things. And I don't think household consumption can stay up at these crazy high rates either. We're running out of excess COVID savings money, credit card use is going up, savings is collapsing, and real incomes are declining. That said, it was a great quarter, twice as good as Q2. Q4 won't be nearly as good. Enjoy it. Despite the fact, however, that Q3 was strong, inflation pressures are coming down. There's no question. Overall inflation is coming down, wage inflation is coming down, energy prices are coming down, and rents are coming down. This is putting downward pressure on inflation. It's still too high, but it's coming down. And as a result, for the first time in a very long time, the Fed is saying, hey, we may well not raise rates. After a long time of saying, we're going to raise rates, we're going to raise rates, we're going to raise rates, and they raised rates. Now they're saying, we may raise rates, or rates may go up, but we'll see. I suspect we don't see the Fed raise rates anymore, and we've hit the peak rate at about 5 3/8. I think we're really done. The unfortunate thing for the market, however, is that often in the past, the Fed would raise rates, and then quickly reduce. And you don't stay at that peak level very long. It's a very short time, and then you come down again. But not now. What the Fed said is because unemployment's it's rising, but it's still very low, and inflation and wage inflation, though coming down, are still too high. What we're going to do is we're going to keep rates at this level for a while. rates are going to stay higher for longer is the lingo that they use. This was a bit of a disappointment and a shock to markets. And as a result of that, interest rates, 10-year treasuries went up, 30-year treasuries went up, and of course, as a result, the 30-year mortgage went up. The 30-year mortgage went up the last 5 or 6 weeks in a row and is now somewhere around 7.75%, 8%. A very high rate, causing a lot of reduction generally in existing housing sales because existing homeowners have great rates that they locked in a long time ago, and new owners, buyers, are reluctant to pay these rates. It's helping new home construction quite a bit. The problem that I'm fearful of is if the Fed keeps these rates at this high rate, the Fed funds at this rate for a long enough period of time, it may well induce a recession because economic activity will slow down. Hopefully what happens is that inflation falls relatively quickly. The Fed can lower rates before consumer spending meaningfully weakens. That would be great, and that way we would avoid a recession. So far, the US economy has been very resilient, and the date of any potential recession keeps getting pushed off. Let's hope that continues.